Myself Vaibhav. In today's session of Visual JForex, we will be continuing our work using the indicator Stochastic. First, we are using this indicator to find the trading opportunities whenever we see that the underlying instrument has spent the time in the overbought or the oversold scenario, and now the turnaround is possible. So we want to take advantage of the indicators lead time, and this indicator gives the early idea for the possibility of the trend change, and that's what we are trying to utilize in this algorithm. So now let us head back to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the prior sessions, the development so far were this instrument subscription was carried out. The position amount was defined at zero. Then I got these stochastic fast blocks of the 4 hourly candle period, and these two are of 15 minutes each. To look at the price action, we are also relying on the get historical candle of 4 hours, and this another one is of 15 minutes, and these two are of 10 seconds each. To define the conditions that there should be minimum price volatility, we have carried out this calculation, and the predefined value is of 30 pips, and this is the actual difference between the high and the low, and we will be comparing these values. On the lower side, the buy side is complete. These are the conditions which need to be in place for the execution of the buy trade. So this setup is complete on the buy side. Now we have to build the sell side, which is going to be the mirror image of this buy side. We have to make sure that both the sides are symmetric. It's not a requirement, but more of an preference from my side, and it is also the common practice that we want to make sure that the conditions which we are using on the buy side should be kind of inverted for the execution of the sell trade. So the condition should hold good on the both sides, and that's the logic behind keeping the formation symmetric. Now I will give you a brief idea of the logic behind the execution of the trade. This is my demo account. I think algorithm might have generated some trade. Okay, so we will overlook it. Now we want we will have to change this to 4 hourly time frame first, and here we want the stochastic fast values to be above 80, and not only that, we want the stochastic fast k to be declining, and it should be below fast percent d, and whenever we have this crossover in place while the value still remains above 80, that means that the underlying instrument has been in the overbought oversold scenario, and the possibility of trend change is emerging, and that's the time we want to initiate the trade. And here we will be utilizing then 15 minutes time frame, and the trade should be initiated whenever the crossover happens. If the 4 hourly conditions are in place, we want to initiate the trade whenever we see that this stochastic fast crossover is happening. Fast percent k should be dipping below the fast percent d in the last 15 minutes, whereas in the prior 15 minutes the fast percent k should have been above fast percent d. And also we will be limiting the output on the higher side. We want this fast percent k value to be above 70 for last 15 minutes, and we have also defined the output on the 4 hourly time frame. Here in this case, the fast percent k output should have been above 80 for last 4 hourly candle, and that's what the condition should be before we go on to place the trade order. Now we head back to the Visual JForex board. Here, this is the setup so far, and we are going to need 11 E blocks. This 11 number I have arrived from the buy side, and as I said earlier, we have to make sure that the setup is symmetrical. So we will straight away take 11 if blocks and then set the conditions. I think 9. Okay, 2 more, and after that open it, mark it. Okay, all right. And first thing first, we will have to compare these fast K10 and fast T10 value, and these are current stochastic indicator values. We want to make sure that in the current 4 hourly candle, the fast percent K and fast percent D are on decline. So to make sure that, we have to put these values as input of these if blocks and compare. We need first input less than the second input. Fast K10 should be below fast D10, and then we compare these values to the last 4 hourly block stochastic fast values, and fast K10 should be below fast K14. So again, first input less than second input. After that, we also have to compare fast D10 to fast D14. Same condition, first input less than second input. Okay, and then we compare fast K14 to fast D14, and the requirement is going to be similar. We need fast K14 to be below fast D14. So first input again less than second input, and then we have to cap this output value. And as I said earlier, we need to make sure that the underlying instrument has been in the overbought scenario before we start looking for the sell rate. So naturally we want this first K14 value to have been above 80. We will not really look at the current 4 hours for stochastic output values. It might be at 70, it might be at 50. We are not really concerned with that. But for last 4 hours, we do have to make sure that this was within the defined band. So in this case, first input should be greater than second input. Okay. Now coming back, and with this we can shift our focus to defining the conditions for the crossover on 15 minutes time frame. Okay, so we will have to now take into consideration the fast K15 and fast D15 values and compare this with the fast K16 and fast D16. The fast K15 is of last 15 minutes, and this block, the 16, is having the shift value up to. So this is the penultimate 15-minute stochastic fast indicator block. In last 15 minutes, the crossover should have taken place, so we have to make sure that the fast K15 is below fast D15. So in this case, it will be first input less than second input. And in the penultimate 15 minutes, the stochastic values should have been in opposite direction. The fast K16 should have been above fast D16 only in last 15 minutes. the turnaround has happened. So here first input greater than second input, and then as I said, we also have to make sure that not too much price move has already happened, and to that effect we will have to cap the output values, and in this case we will need the fast K15 value to be above 70 for last 15 minutes. Okay, so with this we have defined the requirements with the stochastic blocks. Now we have to shift our attention to the price action. First K15 value should have been above 70. All right. And then there is a price action. The difference between the high and the low should be more than 30 pips. So APD needs to be greater than minimum price difference. First input greater than second input. All right. And after that, all we have to do is place the order as and when the price starts to drop below the last 15 minutes candle close. And to do that, all we have to do is compare the candle 18's closing values with the candle 19 and candle 20's close, and just let me check if we have utilized all the 9 blocks. Yes, we haven't missed out on any condition which should be defined with the stochastic block. All right, now it's the turn of comparing candle closing values. So we take auto created variable candle 18 candle close. Oops. This value needs to be put in both of these blocks, and compared with this candle 19 and candle 20 close. Candle 19 has a look back period of 1, which means it is the last 10-second candle, and candle 20 is the penultimate one. So first we will need candle 20 is closed, and it should have closed higher. First input greater than second input, and after that in last 10 seconds the price drops below the 15-minute candle close. So in this scenario we will need first input less than second input. So with this we have defined the conditions for the execution of the sell trade. Now we have to join this to the open at market block, and here it is. Since we are using open at market, as soon as the conditions get fulfilled, the trade order will be placed. First input less than second input. And before defining the parameters of this trade command block, just in a short moment, I will arrange these blocks and join it here. Okay, that's much better. Some other block needs to be put in place, not this one. Okay, This is the one, right one. And 5 more. So this is done. And now coming to defining of these parameters for the trade command block. In this case also we need to make sure that these parameters are symmetric with the parameters we had set for the buy trade command. This is going to be the sell trade command. Default instrument will remain as it is. Trade amount I will change it to 0.1 million. The page will be at 2 pips. Stop loss is going to be the combination of 15 and 30. Just let me check one more time. This is the combination. Yes, this is the combination which we had also used for buy side. We are keeping this stop loss and take profit static, but if you want to make it dynamic, you can do that. You can take the price action data. You can, for example, take even the last 4 hours high and low difference, and depending on that, you can take a certain fraction of that and define the stop loss and take profit using that values. So it will be in conformity with the volatility which we are observing in the underlying instrument, or for 4 hourly time frame for Euro USD. I think this combination should also work well, and it's always a personal choice. So that's it from my side for today's session. I hope you have been able to understand the logic and then the execution part of this algorithmic setup. And hopefully you will be trying it out on your own. And once you are done with the setup, you can test it on the historical data on JForex platform and see whether it is profitable or not. And depending on the outcome, you can use it on the demo or live account, or if the need arises, you can make some changes to the logic. So that's always the option with you. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on market developments. See you next time. Till then, goodbye.